And if you're an investor and you're backing a story that you think has potential to have a successful exit, the real question is, who is the management team that's going to get it there? And how much of it am I still going to own by the time they get it there? And I think, and that is a real point of differentiation for us.
Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Alexander Scanlon is the Managing Director and CEO of Barton Gold, an Australian gold exploration company listed on the ASX, OTC and Frankfurt stock exchanges. The company is focused on exploring and developing the Tarcoola and Tunkillia projects in South Australia. As Alex discussed, the company has done a lot to accelerate the project since listing in 2021, but he highlighted the importance of having a mill and ore processing plant in the company in close proximity to the projects. Alex also shared the unique strategy Barton Gold has used to monetize assets, limiting the need to raise funds and reduce shareholder dilution. Here is Alex Scanlon.
Hello, I'm Ben Kostrich, and this is the Market Bull podcast. Joining me on the show today is Alex Scanlon, the CEO of Barton Gold. It's a gold explorer listed on the ASX, OTC and Frankfurt stock exchange. A bit about his backstory. He is one of the co-founders or the founder, which he'll explain a bit throughout the episode. We'll be talking a lot about South Australian gold and the opportunities within that region, which you'd say, given that I'm based in Perth, Kalgoorlie's always had the attraction, but South Australia has quite a story to go along with it as well. So welcome to the show, Alex.
Thank you very much.
So talking about your history, you're, I guess, traditionally from the finance side and have ventured into, well, you could say this project and founding it and getting the opportunity with Barton Gold. So talking about your history, how did you navigate your way into this field?
So I have a bit of a family background in real assets, so combination of mining and real estate. And actually it was back in the US, I was actually building a real estate investment trust investment fund for essentially a series of private investors before then going to graduate school in the UK and working in very, very structured finance. But when I moved to Australia about 14 years ago now, coming here was an opportunity to get back into real assets or tangible assets. And, in Australia in 2009, that's basically mining, it's agriculture, or it's the infrastructure that ties it all together. And I've always had an affinity for mining. I think, it's an essential part of the global economy and everything we see around us. It's two facts in life is it came out of the ground and it's been in a shipping container, basically. So, I just fell into kind of an interesting opportunity there. And since that time, I've been very, very fully focused on metals and mining, both from a principal investment and an advisory standpoint. So I've done a number of deals on sort of both sides of that line, both sides of that table. But, fast forward, several transactions on both sides, fast forward 6 or 7 years, and we started looking at making a significant gold play in a tier one jurisdiction where you had excellent geology, excellent access to infrastructure, and chiefly and most importantly, property rights. So Australia kind of rings the bell on most of those things, and the assets that we put together ring the rest of them because we have a very strong infrastructure position, a very significant ground position, very strong geology, and that was really kind of the genesis for Barton Gold, and that was done around a macroeconomic analysis, which was saying to us we want to be exposed to gold in a tier one jurisdiction, and South Australia is a tier one jurisdiction with a lot of gold in the ground.
And then forming onwards and I guess accumulating the projects and even going through, as you said, multiple transactions to get where you are now. I mean, what was going through those processes to accumulate, as we'll touch on, the two primary projects that you've got at Barton Gold?
So the asset package we have actually was pulled out of another company that went into administration. So it was a company called WPG Resources, and all of the gold assets that they owned, we acquired from the administration, cleaned up, refinanced, rebonded, and then started doing a lot of technical work. And really, so in a weird way, it was sort of three transactions because we bought the mining assets themselves, and then we bought the real estate assets, and then we also bought all the loose equipment.
Mm.
And it was a relatively simple strategy. So the strategy was simply that there was an underground operation that was quite complex, and that was kind of dragging down what we saw as a much more attractive, broader portfolio. And in many ways, it's if you already have the gold thesis, if you already have the macro thesis set, and you see an opportunity to buy a company with four divisions, three of which are good. So
Mm.
being the two main projects, and the third being the only mill in the region, and the fourth division is a flaming dumpster fire. Close the lid on the dumpster fire, and you've got a good company again. So it was a very sort of simple credits-based analysis around a very strong platform.
Okay, and then moving forward now, I mean, for those that are unfamiliar with Barton Gold, you've had a very busy month of July. We're recording
Mm.
again just early September on the 6th of September. There's been a lot of activity, but for those that are unfamiliar with the company, and given that you have been doing quite a lot of activity, what is the company?
Like at a very high level, sort of short summary, Barton Gold is a pure play South Australian pure play gold developer. So we went into this historical region where there's about a 130-year history of high grade gold production, but very sporadic. So sort of very, very focused in small areas, or very shallow without significant sort of technical work done to tie it all together. We've acquired pretty much every significant historical exploration and production asset in gold in that space. And so we've consolidated what we think of as the material components of the central Gawler Creighton gold province. That's across the highway, quite literally, from the IOCG province that BHP has just consolidated. So that's kind of the domain in which we live. It's a very, very, very well known mining area, very strong geology. We have running through our tenements, we have the Sydney to Adelaide to Perth railway. So we're like right in the heart of Australian rail infrastructure. And we also have roads running right past our projects. So it is gold focused in a gold district that's proven. And what we're doing is essentially pulling it forward, doing a lot of work to build up regional geological models towards what we would see as a bigger objective. Rather than small scale intermittent production, we're building a multi-million ounce resource base because we want to be producing 150,000 ounces per annum and sort of enter that sort of genuine sort of junior mid-tier exploration standpoint and production standpoint. And that would make us South Australia's largest independent gold producer.
And yeah, you were saying before, back in the origin, you had really three good parts of the company, and then shelved the sort of dud. And then if we drill in now on the two projects, and you said the mill as well, which I'll get back to, but you've got the two primary projects at Barton Gold. So can we go through a little bit of depth about at least both of them? But you pick the flagship, and then we'll just dive into that.
Yeah, like let's start. If we start in the middle distance, right? Because the flagship if we think of the flagship, we think of that as the anchor for scale.
Mm.
We're really big fans of open pit mining, right? And this is one reason why we have closed that underground asset. We do own that mine, but we sort of have closed the gates. And we said, look, it needs a lot of technical evaluation. It's deeper, it's complex. We'll come back to that later. In the first instance, we're targeting, low cost, high efficiency, open pitable mineralization. That is where you can get efficiencies of scale and actually build scale without sort of having to spend billions of dollars getting
Yep.
deep underground. So if we start with that middle distance, we're looking at our Tunkillia project. So this is the southeasternmost of our project package, and this is where the geology is essentially very broad zones of gold mineralization along a very large shear zone. So this is the sort of Kalgoorlie style shear zone systems where we originally bought a 558,000 ounce deposit. We have since grown that twice. So we grew it to 965,000 ounces in October of 2020. We grew it to 1.15 million ounces again earlier this year in April. And we have found three new gold zones in the immediate vicinity of that deposit. So it's something where that deposit and those three new gold zones are actually just in one small area of that shear. So we're building that up.
Mm.
And then if we look at the next project, what we might think of as sort of the complementary project, we're talking about Tarcoola. And I think about this in complementary for a couple of reasons. One, it's very close. So between these two projects, they're about 70 kilometers apart, or 45 miles for your North American or European, Western
Mm.
European listeners. So really, they are satellites to one another. And when I say complementary, it also comes down to geology. So whereas Tunkillia has this really big, broad, open pitable mineralization, so you get really large equipment and low unit costs and high efficiency and hopefully high profit margins. Tarcoola is what we believe Tarcoola is and will become. It has been historically and will become a series of smaller, open pitable, high grade workings that essentially act as high grade feed to go into that big bulk operation at Tunkillia. So if you have an opportunity to process high grade material, you'd always want to do it through a more efficient, larger mill because you are essentially it's cream on top of cream.
Mm.
So Tarcoola has, we believe, the potential to act as high grade supplemental feed to a very efficient operation. But the flip side of that is that when we started talking about the middle distance, that's sort of 4 to 5 years, 150,000 ounces, where the bulk of that's coming from Tunkillia. As we continue to map out high grade mineralization at Tarcoola, we have the ability to start earlier stage one operations there. And the reason is that we own a mill. We own the only gold mill in the region. And that mill was producing gold from the ore at Tarcoola during 2017 and 2018. So Tarcoola has the opportunity to be not only blending feed and supercharge a bigger picture, larger scale operation, it has the also equally the opportunity to be sort of peeled off, get a couple years of mineable reserve there, and start producing 40 or 50,000 ounces per annum there, generating cash flow using a mill that we already own. One, you become a producer, right? So you get some kind of a re-rating in the equity market. But two, you also get a re-rating from a credit standpoint. So when we go to build a second mill, we're not going to banks and saying we are a dreamy-eyed explorer. We are a gold producer who is generating cash flow and has actual asset value, actual security value for them in a gold pouring mill already. And then you can have a much stronger conversation about your the terms of your credit, and you're producing the cash that you need for the equity component. So it's basically the idea is a staged, lower cost and lower risk pathway to get from 0 to 150,000 ounces per annum. But it is lower cost, lower risk, cheaper, and ultimately therefore faster to go from 0 to 25 to 50 to 150. And it's more manageable as well. So that's sort of the transition that we see for ourselves out of the next sort of 4 to 5 years.
Well, it's quite a nice, you could say, strategy from the outset of knowing that there's these pieces of the puzzles really available. It's just about setting it up so it can strategically operate. And as you said, going from an explorer to a producer has so many more benefits. And I think naturally for a lot of companies that are trying to do this, there's a lot of capital expenditure, and you just nailed it on the head there, saying that already having one, yes, there'll be a little bit of capital required to sort of optimize it and almost repair it in some regards, depending on when it was last used. But that gives yourselves a real opportunity within the area as well. And I can imagine, as you touched on, there's a few other big players or other companies in that area, and probably a bit of historical sort of evidence to dictate or talk about the area. So when you're operating within that Gawler Craton area and I guess some of the geology about it, I mean, for those that are unfamiliar with it, what has been some of the history there and some of the other notable players in the area? Because that's another point, that if you've got a mill that, as that does continue to expand, who knows what opportunities there are for other players as well to start, collaborating in some of those other sort of fun talks that go on later down the track.
Yeah, look, so the probably the best known operation in the central Gawler Craton is BHP's Olympic Dam. So really, really large. Well, it's sort of an everything deposit. It's huge. It has gold zones and base metal zones, but it's primarily a copper and uranium producer. And then to the south and to the north of that, you have to the south you have Carapatina, and to the north you have Prominent Hill. Those are two operating copper mines that were until recently owned by Oz Minerals, which is a very well-known copper producer, and BHP has just acquired Oz Minerals. So we are sort of right in the heart of South Australian mining. South Australia is kind of the Chile of Australia in terms of copper production. And the state is working to actually significantly enhance and expand that. Obviously, there's a few reasons for that. One, the sort of electrification of everything thesis that's happening in the world. Copper's a natural beneficiary of that because you can create all the batteries you want, but you need to string them together with copper wires,
Yeah.
basically. Um, there's a very, well-known presence in the industry there. There's a very strong mining industry around us. Less well known, but equally relevant in many parts of the markets. South Australia is also a producer of iron ore.
Mm.
But South Australia produces a very high grade, very clean magnetite concentrates. So these are concentrates that are 67, 68% iron, as compared to your standard sort of benchmark 62% hematite from Western Australia. So South Australia is well known for having very high quality magnetite. Around where we are, we actually have, again, BHP operating on sort of the eastern margin of the Central Gullah Craton. There are a number of iron ore producers. There are a number of other gold and copper and rare earths explorers. So there's a lot going on. And I guess our mission, sort of what we've, the challenge is the opportunity and vice versa, quite frequently.
Mm.
We spotted this opportunity to consolidate this region before people woke up to the opportunity. So now we're doing the geologic work and educating people about the region. And now there's quite a bit more attention and interest coming into the area around us.
And that probably feeds into, as we said, the listing and getting a bit more exposure to the OTC and Frankfurt exchanges, because I can imagine there's a bit of attention for being a gold player in Australia, but outside of Australia, there's a bit of attention. So what was going through, I guess, the board and company's mind when looking at those options and naturally going through the successful phasing of listing? What were some of the decision and ideas behind that?
Yeah, like I think what we're trying to do was balance a couple of different objectives, right? Going to the OTC QB market and onto the Frankfurt exchange, these were essentially cross listings as opposed to full regulatory listings. So we weren't issuing securities. We're very well capitalized. We
Mm.
didn't need to raise money. But what has happened over the past sort of 18 to 24 months since our IPO, we have, I think, perhaps not humbly, but I think honestly, a pretty unique track record for one, extremely careful treasury management, generating a very high return in terms of discovery and corporate progress with the money that we do spend. And then also, demonstrating to people that this is a bit of a unique platform, unique in the geology with the mill, and that it's got a real pathway to move forward towards development, right? And I think that's a really important differentiator because there's sort of two models in the junior industry, right? Is one model is, and I sort of jokingly call it spray and pray, right? So
Mm.
you drill and you hope you find something, and then if you find something, you try to grow it because you're near a mill, and that mill will get hungry, and you're seeking to be acquired. And that's a very good investment methodology if you're in that space. For us, though, we want to be the developers. We want to be the mill owners. We want to continue to own all the infrastructure in the region and consolidate these economics and opportunities over time. So we're more on the development spectrum, and that actually kind of sets us more apart. And we started presenting and engaging with a lot of investors in North America and Western Europe. And the feedback that we got was very positive, and it was generally along the lines of, one, we actually see, if you compare Australian opportunities to Canadian opportunities or North American opportunities, there seems to be deep value in the Australian opportunities. Two, the ASX is a very highly regulated market. So I have the same disclosure obligations as BHP Billiton. There is no
Mm.
junior market. We're all in the same market. We're just at, they're at the big end and we're at the small end. So there's an increasing awareness of the ASX as a sort of a market of greater faith and confidence. And the other thing too, again, is that sort of development angle. People can see, okay, we can see you've laid out stepping stones, and we can see you taking steady steps along that path to operations, and we can see you very carefully guarding treasury and not diluting us every 6 months. So we love the story, but hey, being in the US or being in Germany, it's hard to buy securities in the ASX.
Mm.
So we went through that whole process, got comfortable with how it all works, and we opened those exchange listings, those cross listings, so that the world's largest, deepest capital market can now actually access our security easily. And then the German speaking countries, Switzerland, Germany, Austria is a very, very strong gold investment markets. And during the 1990s, a very good chunk of Australian development capital for gold actually came out of those markets. So again, creating these connections and making it convenient for these very sophisticated gold investors to participate in what we see as a unique story. It's a good doorway to open, and now we just keep
Mm.
building awareness.
And you mentioned there before about a tight capital structure, not needing to go back to raise, and that sort of feeds into, as you said, your sort of asset monetization strategy. And I
Mm.
mean, that's another uniqueness to Barton Gold, in regards that, yeah, you're not always going back to market, you're not always raising funds, you're finding other ways to get capital in to then develop and execute on the projects, and that's what's being picked up, as you said. So, I mean, what are some of the strategies that you've done to do that? And I mean, who had the thought process to do it? Because it is something that you don't see every single day from other explorers.
Yeah, look, I think it kind of goes back to our DNA a little bit in terms of the thought process. So when we were looking at these assets to begin with, we were sort of viewing them through the lens of a helpful kind of a helpful friend of the senior creditor, trying to sort of figure out how could they get the company that, or the manager that was running the company, to sort of work its way out of administration or out of a potentially bad situation.
Mm,
And when you go to these sites, and the site there where the mill is had been operating for close to 15 years. When you go to these sites and you look around, if you have a credit and financing background, which I do
mm,
alongside the equity side, but you kind of look around and what you see is a lot of value sitting in piles on the ground. And legacy mine sites tend to get very fat in terms of that, sort of wasteful in a way. uh, Value tends to pile up, and things kind of, excess supplies get purchased, and things are redundant. And also preferences and order of operations factor into how materials are handled over time. So when you buy an operating mine site with a mill, we also bought a village, and we also bought historical stockpiles, and we also bought everything that was trapped in that mill, and we also bought a whole bunch of surplus equipment. And so one thing that we've done, while sort of in parallel working on the exploration and discovery synthesis, is to run in parallel what we kind of call our special projects synthesis. So we have disposed of surplus camp and equipment, things that we will never need for our strategy, or things that are literally going to be scrap and pushed into a
mm,
heap in 5 years' time. There was a shortage of the ability to buy mining accommodation in Australia, due to COVID restrictions, and then also fractious trade relationships between China and Australia. So we were actually able to dispose of some of these 10 and 15-year-old camp accommodation units for more than they were worth 15 years ago. So again, to monetize those, extremely high value for us. We were
mm,
able to dispose of surplus equipment. We actually rent out our camp and village accommodation to other regional parties. So whether private explorers, operators, government entities will often use our camps as bases. And then we did a gold room clean out of our mill, and we sold $1.5 million worth of gold from that. And then fast forward a year and a half later, we took down our gravity circuit because we are looking at how we can possibly optimize that for a future restart of operations. In doing that, we took out about what is now turned out to be 11 tons, 11 long tons of gold bearing concentrate material that we've cleaned and prepped for sale. And that contains around 1,400 ounces of gold. So in Australian dollar terms, around $4.2 million of the gold. So that's something that is work we would have done anyway, but it's paying us back 10 to 1
mm,
in simple terms. And so we are now, since we IPO'd about 2 years ago, we are on track to generate nearly $10 million in additional non-dilutive cash that we didn't need to raise from the markets. So we've only done one small placement since we IPO'd. We didn't need the money, but it was after our latest resource update. We had a number of institutional investors say, we recognize the story, we see the potential, we want to be a part of it. Can you open up a small raise? We can jump into the register, and we're
mm.
interested supporters. So, we had IPO'd to raise $15 million 24 months earlier. We still had 8. We were generating these concentrates. We raised a total of 4.5 million in placement to 8 institutional investors who specialize in resources and specifically gold investment. And now we are plowing ahead, and we expect to continue doing that. So we are actually looking at processing some of our historical stockpiles to generate and sell gold concentrates. So on the asset monetization side, that it makes a huge difference because
Massive.
$10 million is 2 $5 million placements we didn't have to do every 6 or 8 months. And if you look at it now, if you owned a share of Barton Gold, or let's say you owned, shares of Barton Gold that represented a certain percentage of the overall company at IPO. Today, you still own 90% or more of that equivalent position. Whereas, for many of our peers who are only capital consumers, which is the traditional standing of a junior explorer, they, in that sort of the past 30 months, they have probably done 4 or 5 capital raisings to raise 10 to, to dilute 10 or
Mm.
20%, and have had to do that at 10 to 20% discounts. So, if you run the numbers on average, I don't know, but if you looked at our peer group, I would bet that whereas our shareholders have taken, maybe 7 to 9% dilution, but really value add dilution at almost no discount. We placed almost at market when everybody else was placing at 25% discounts. They might own 80% of the story, if you will. Whereas a lot of our peers, the shareholders from 2, 3 years ago, might
Mm.
own 40 to 50% of the story. And if you're an investor and you're backing a story that you think has potential to have a successful exit, the real question is, who is the management team that's going to get it there? And how much of it am I still going to own by the time they get it there? And I think, and that is a real point of differentiation for us.
Oh, big time. And we're still seeing it now that the capital markets have been quite difficult to raise funds. And we've seen companies go back to the market. They still are at, 20, 25% discounted rates with options.
Correct.
And it just dilutes shareholders. There's a lot of frustration, a lot of angst, given that there's been these emphatic rises and then emphatic drops because of market conditions. And this
Mm.
really just ticks all the boxes from a shareholder point of view. It means that the company can continue on. And as you said, this is something that you've been involved with for a while, but I can imagine there's quite an experienced board and group of experienced individuals involved in Barton Gold. So who was alongside the team with you? And then again, what have they previously done?
Yeah. So when you look at our team, yeah, we have a team that's pretty impressive. We've built it pretty carefully. So in our leadership team, we have comfortably north of 200 years of experience exploring for financing, permitting, building, operating, and optimizing resource assets with 2 particularly strong pedigrees, one being gold and one being South Australia. So we're literally building right into our own wheelhouse here. If you look at my senior board and management, about half of our people come from Normandy and Newmont. So our chairman was the former CFO of Normandy Mining, which was Australia's largest gold producer through the end of the 1990s until Newmont acquired Normandy. And if you remember your gold history, now everybody is talking about Newmont acquiring Newcrest.
Newcrest. Yeah.
20 years ago, it was Newmont buying Normandy. So I also have my general manager of projects and my general manager of exploration are also former Normandy and Newmont. We have really strong corporate governance in our team. So we have a director who was the former general counsel and company secretary for Santos Limited, which is a multi-billion-dollar oil and gas producer in South Australia. And we actually have a mills specialist on our board as well. So somebody who has a very strong track record looking at mills, optimizing them, building teams around them. So, we've built a complementary suite of capabilities that really are much more kind of starting kind of from an operational institutional end. And that's how we're approaching an explorer developer, if that makes sense. So we built a team that
Mm.
reflects the forward ambitions that we've talked about. And now we're doing the work and kind of unlocking that value.
It is. It's a specialized and optimized. I love that word that you said there. Given the vast amount of experience there and track record, you could say, especially those names at Newmont and Newcrest, we're all familiar with those. And as you mentioned, there's a lot of work to go on. This is it's not a 12-month plan. It's something going well into the future. And as you said, to become quite a dominant player in the South Australian gold demand and region, I should say, or product. But I mean, going forward now, I mean, there's probably plans to expand the resources and optimize the mill. But I mean, for investors that are following the story, I mean, what can we really expect over the next, 12 months coming from the company, and what's going to be the most exciting bit, do you believe, for the company going forward?
The answer is a lot. You can
Mm,
expect a lot of stuff, both in terms of what's happening on the ground, assay results, and then let's say consequential results, which are hopefully several updated mineral resource estimates. So we have just started growth drilling again on the resource where we updated our resource in April of this year. Uh, in April, we added 189,000 ounces to our 223 deposit. So that's the kind of cornerstone deposit at Tunkillia. The cost of adding that resource is only about $12 Australian per ounce on an all-in basis. So people typically quote the drilling cost. This was drilling and assaying and people and logistics and modeling and all of these things. So really, really bottom end of the cost curve in terms of resource growth costs. We're looking to grow that again. We have 3 new gold zones that we've confirmed in the vicinity of that deposit. We are also following the current drilling at 223 with drilling on those to see if we can convert some of those into entirely new JORC resources, so new deposits. We have just completed a seismic program across Tarcoola where we have that sort of historical high-grade gold field. We're mapping all of the structures where they come to surface, and then we're going to go systematically work through those. So across the next 6 months, what you'll see is 15 to 25,000 meters of very targeted reverse circulation and diamond drilling. That is a balance of regional discovery and growth and resource conversion. And hopefully we will have 2 resource updates between now and the beginning of March. And then potentially, depending upon the sequence of work going, we could potentially have another one around mid-year next year or the end of the year next year. So the idea is we're really kind of shifting. We've been in high volume of activities, but now we're sort of dropping the wheels on the road and taking real traction in terms of resource growth, so that we can get into 2024 and start to think a little more forward looking now, sort of swing the camera lens forward and say, okay, we've spent 2 to 3 years proving the geology, growing resources. We bought them, we grew them, then we IPO'd them, we grew them, we grew them, we grew them again. So they're going to keep growing. Now we're going to think about how we turn them on, and then
mm,
put ourselves in that from 2024, start putting ourselves in that forward looking development track. And that's where, I mean, it's all exciting, but
very
that's
much
where
so.
you're starting to see those, pathways and moves to transition up from that sort of more explorer looking status to developer operator looking status.
And you said there's a lot of, I guess, capital allocations, or I guess recalculations when you start developing and merging
Mm.
into those fields as well. So there's a fair bit going on. And for listeners that are now, I could say, happily engaged with the story, I mean, finding the news and staying on top of it, there's a lot of stuff out there these days. But where are the best places to go to follow the company and stay on top of what yourself and the team are doing?
Look, obviously, if you are a regular ASX investor, I mean, some people will follow the ASX on their own trading sheets, and some
Yep.
people have a Commonwealth Bank account. We trade on the ASX under the ticker symbol BGD, but you can also just go to our website. So we have an investor section. We have a very busy announcements page. So we have a lot of stuff that we're doing, but we don't flag everything as material price sensitive.
Mm,
But everything we're announcing has a reason, and is material in terms of being a part of the bigger picture. So we keep investors very regularly updated. If you don't want to check the website, we have a mailing list you can sign up for. We very actively communicate with shareholders. So if there's any kind of significant ASX announcement, that will be in your inbox the morning of the announcement. I also prepare a monthly wrap up report. So obviously quarterly reports are part of the ASX reporting process. But at the end of every month, I actually sit down and I write a short note to all of our investors or people who are interested to follow us on the mailing list, to say, look, this is what's happened this month. This is what we're excited about. This is what's coming up. This is what you can expect to hear in the future. So it's very, very kind of like open. It's very easy to follow us. So even if you don't want to follow every announcement, you can literally just open once a month. You can open the wrap up, and get the full picture and have a pretty good sense of where we're going. And if you want to kind of get a deeper understanding of what it all really looks like on our media page, we actually generate a lot of content so you can actually see work programs in action. You can see what the areas look like. You can see it's just wide open, easily accessible stuff. We don't have to battle with mountains and jungles and all these things. It's big, wide open desert. So the media page is very, very helpful to look at things that, discussions like this. I often get involved in bigger picture macro discussions, so economic and geopolitical discussions, if people have an interest in that. But you can actually see our projects and see exactly what we're working on when we are explaining what we're working on.
So I really like that the piece, the monthly sort of transcription from yourself. It just promotes that transparency, and as we know, investors like to be kept in the loop. They don't want to be knowing that they're just sort of hoping that their cash is just going and don't know what's happening with it. So it's quite again another unique part of yourself and what you're doing. And I know that there's the social media pages as well that are quite active. But yeah, thank you so much, Alex, for speaking on the show. There's you're very well spoken for one, but you know a hell of a lot in the gold, and I'm quite excited to see how Barton Gold develops, because there is a clear strategy and uniqueness to the company, and I think it's it's emerging into this very potential thriving time for gold as well, which we didn't talk about, but maybe when you come back, we can talk about the macro factors driving gold, as you mentioned. But yeah, thank you so much for speaking on the show today.
Yeah, thank you very much for having me.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.